Welcome to Channel 17, the Town of Colonie Government Channel.
Welcome to The Money Factor, our program that focuses on local business and personal finance topics. I'm Richard Naylor, your host. In the U.S. today, the average credit card balance is over $12,000. What does that mean to the person who owes that much money? What does it mean in terms of their life? Our guest today is Diane Verderame from Freedom One Mortgage, here to discuss credit scores and what they can mean to you. Hi, Diane. Welcome to the show.
Thank you.
So what is this with credit scores? Some people may not even know what they are.
Credit scores were actually created a while ago. They first started in 1956. These two nerds, great guys, very smart. One was a computer scientist, and back then we had, computer science, and they applied mathematical, the other guy was a mathematician, principles to it. And they first developed a series of algorithms for operations research, which was, what they were doing back then. But then they realized they could quantify risk. And quantifying risk is really important to businesses because it determines whether or not people are going to pay their loans, whether or not they're going to see the money they're supposed to be making on the loans, and whether or not they're going to have what's called bad debt, which is people who don't pay their bills, don't pay their debt. So this is really, really important, now so more than ever.
So who creates these scores?
Well, the two guys were called Fair and Isaac. And in 1956, they started a company called the Fair Isaac Company, which stands for, what is it, an anagram? Is FICO, Fair,
Okay.
Isaac and Company. Since then, we've evolved. And there are now 3 credit reporting agencies: Experian, Equifax, and TransUnion. And there's only 3. Like, people are telling me they know TRWs and, whatever. That's old. Those are the 3. And each of those 3 credit reporting agencies uses a series of algorithms to come up with a magic number. And those magic numbers are 3 individual credit scores. And you don't average them. You take the middle one to determine what your score is.
So
and this is for mortgages.
So each of those 3 companies produces one score, and then whoever is going to use that score gets the average? Or
The middle score, not the average.
The middle score. Is it published as only one number, or do businesses have to go into all 3?
If you're smart, you should go into all 3. Because if someone says, my credit score is 685, but if the mortgage person only pulled 1, that is not a true representation of what your score is. So you should do what's called a tri-merge in order to determine specifically, because what banks take is that middle score.
Okay.
And the reason they don't take an average is because those special algorithms that those companies came up with, who wants to mess with them? They've got 5 pieces of information that are weighted with 100 specific parameters, so nobody wants to touch them. So they take the middle score in most all cases.
I can see that having a simple answer to a question would be wonderful for a bank or a loan officer. Is this person worthy or not?
Exactly.
And how worthy? So this does seem to make it easier. Okay, so credit scores, we all have one. I've always thought of credit scores in terms of, I worry that there's something on there that I didn't know was on there. But this is not the same thing, is it?
No, it is.
It is.
Because you can clear up some, and as we talk further, you can clear up some mistakes that may be on credit reports. And these days, I will tell you, I see more mistakes on credit reports now than I did even 3 years ago.
Okay.
I don't know if they're data people. I don't know if it's because there's so much more information and different sources that we have to the repositories that take that data. But I see a lot of mistakes these days. So it's important for someone to monitor their credit and to keep it clean.
I think most of us know that we can now go and look at our credit reports for no charge, and we can do that once a year. We can go to all 3. But I didn't see a number when I went. I saw a lot of things like I pay my bills on time.
It's true. And what I'm finding is, and I haven't even, I pulled mine at work and I found out that I shouldn't even be pulling it at work because it's what's called a hard pull, and we're jumping ahead of ourselves a little bit. But when you order it yourself, apparently what they do is they charge you extra money. It's free, sure, so they can tell you what you're doing. but they charge you extra money to get the number.
Ah.
Everything in America is
So the number costs something.
apparently so.
Okay, so we know that we should be concerned about our credit rating and our credit number. I guess the question is, why?
Very succinctly, the better credit score you have, the more money people are wanting to give to you to borrow because they know you were a good person to pay it back. And you get those loans, those borrowing capacities at lower rates, sometimes at much lower rates than people who don't show good borrowing behavior. So if you want to save money, or if you want to spend less money on your car, your home, and it can add up to hundreds and thousands of dollars a month, swear to God.
Okay. Doing a little research before the show, I was trying to learn more about this. I noticed in one article they talked about hiring decisions could potentially be made based on this.
That's true, and that's new. That is maybe within the past, I'd say 5 years, and there is a correlation. This is only in some studies that I have seen, so it's not a fact. But there is a correlation between your credit score and your work effort, your level of morality. And I mean, we're talking real psychological things now, which is, gray matter outside the box. But that is why companies look at your credit score, because they want to see what kind of a person you are. Your credit worthiness reflects on, and I don't want to be judgmental here, but it actually reflects on your, you're paying your stuff. You're paying your bills.
It makes sense to me, and it's easier to get, I would assume, than, is this a good person? How do you answer such a question?
And I hate to even use that word, is this a good person? But at some qualification level, that's what they're looking at.
Okay, so we all have a score. What kind of score is this, since I've never seen one?
Okay, the scores that are used today, the range is from 350 to 850. I have only seen one score in the 300s. If you're in the 3s, you're real bad.
Real bad.
If you're in the 4s, you're real bad. I can't do a loan for you in most cases unless you're at least a 500, and then your rate's going to be astronomical. On the other side of the spectrum, you have people who are 800s, and I do a dance for the 800 people. I've only done 3 dances, but that means your middle score is in the 800 spectrum.
What's the absolute top?
850.
850.
The highest I've ever seen is an 815. So, not only does it mean you're paying bills on time, but it means you've been paying them on time for many years, and they're big bad bills. Like they're balances that are big, or limits that are big.
Okay, so you get 3 numbers. You hope that they're high, but they might not be. How do we know what we should be doing in terms of having a good number? What makes a good credit risk?
There are 5 components that comprise the, and I almost want to look at my graph, but I can probably do this from memory. 35% has to do with your payment history, and that includes what you've been doing in the past. 12 months is the most important, 24 months is as important, but your most recent behavior is far more important than what you did 6 years ago. So let's say you had a bankruptcy 3, 4, 5, 6 years ago, but you pay every bill on time now, you're going to be in the 700s again. You can get your score up to the 700s again.
Okay.
So 35% has to do with your payment history. How long have you had this card, and how long have you been paying it on time? Same with your car loan, same with your mortgage thing, same with your mortgage. The next biggest chunk is the debt ratio.
And we can put this up on the screen so people can see that.
Okay, yeah, that's good. The next biggest chunk is the debt ratio. And that is really where you can have a big impact. Your debt ratio has to do with the limit on your cards. So let's say you have a $1,000 limit on a card. The ratio is, what a ratio is. It's a divisor. I don't want to get into the math. But think of that in terms of how much you owe on that $1,000. So if you owe $900 on that $1,000, you're using up all your credit. And it looks to the algorithms, looks to the computer equations that they're running, that for every dollar I give you, you're going to use it all. Now, there's some tricks that I can impart to help people do this. If you're not buying a house or a car or whatever, and you're not going to be working on your credit cards for a while to get a loan, you can call them and say, I want to increase my credit limit. Don't do this if you're a bad credit person, but if you can behave with credit, let's say my balance right now is $2,000 and my limit is only, I don't know, $3,000. I can increase that limit to $10,000 if the credit card company would, of course, allow it. If that's the case, 200 compared to, or what did I say, 2,000 compared to 10,000 is only 20%.
Right, as opposed to 60%.
Exactly. Now, the other rule of thumb is to get your score to be good, which is like 680, keep your limit at 50%, or your balance at 50% of what the limit is. If you want your score to be great, keep it under 30% of what that limit is. And what I tell people who say, oh my God, I can't use credit cards, and I say, get yourself a secured credit card and buy groceries every week, and when that bill comes, because you don't want to have a balance on groceries, pay it off every single month. That will improve your credit within 3 months. But you have to be disciplined to pay that balance off every month.
It sounds a little confusing. What I think some people would think, without knowing how this works, was that not having credit card debt would be better.
Excellent point.
So what if I had 5 credit cards and I only used them once in a while?
Excellent point. You have to use credit. People say to me, I cut out my credit cards and I'm never using them again, and I go, but they don't know you're out there. They don't know that you have the ability to get those debts and to pay them off. You have to show those credit reporting bureaus out there, and the Macy's and the Sears and the companies that where you buy stuff, that you are able to pay the stuff off.
Now, even if I bought a home, let's say, and I paid it off over 20 years, would that outweigh a credit card?
Actually, what I tell people is your mortgage is your biggest piece of influential data to improve or discredit you. You pay that mortgage on time every month. I can, even if you don't ever pay another credit card, I can still refinance you. You won't have great credit, but that mortgage is more important to be paid than any other thing you have.
I think there's some sighs I hear out there.
What, with people who pay their mortgages?
Right.
But you should pay everything. If you can, what I tell people is even pay the minimum balance and just watch the payments and try not to max out your cards. There's one other point I want to say when we're still talking about
Sure, let's continue
the debt ratio. Spread it out. Let's say you have 5 credit cards. Spread out that debt between all 5 credit cards. I don't care if one of them is at 4% and one of them is at 30%. If you're at a point where you want to get a higher score, the savings on the credit card it's not as important as the rate you're going to get on your car loan, on your home loan, the bigger more sizable loans.
I think that's a good point, because today especially a lot of people get a card that they might get points for maybe airlines. And so whenever they go in, the temptation would be to use that card to get a few more points. So they would really have to balance their goals.
Exactly. Or at least know where they are and keep an eye on the whole picture. Because I have one of those cards, but I use it and I pay it.
Is there an advantage to have 5 cards versus 3 cards, or do they look at how many cards and say, well, this is a good number and that's a bad number?
Yes, good question. You don't want to start having so many cards that they say, wow, this person has got a lot of credit. But you do want to have, I would say, 3. You need a minimum of 3 trade lines, a credit card, auto loan, whatever, in order to do to have good credit. In fact, that's one of the things we should talk about, the credit type. That's 10% of what impacts your credit score. And if you have just the Banana Republics and the small specialty stores, that is not as weighty, as important as having a major credit card like a MasterCard or a Visa, one of those. And it's also helpful to have an auto loan or a mortgage, but it's not the end of the world if you don't. It's not.
Now, I think you said something before, but I didn't know the answer to it at that point. I still haven't asked you. Why are credit scores more important today than they used to be?
I have the Diane theory on that. And I watch CNBC all the time. Our U.S. economy is becoming much more financially driven than even 5 years ago, when we were more of an information economy, and before that we were more of an industrial economy. What's driving our economy right now, largely, is money and people marking that money up and moving it around in our country. So how is that quantified? How is that risk quantified? And more so than ever, because that's what's driving the whole, it's not manufacturing sector, it's not, you know, necessarily high tech or the information sector, but we're all borrowing at a higher level. Quantifying that risk is important to each and every company, whether you have your own business, whether you need to be able to quantify that risk. And quantifying that risk directly correlates to the interest rate and therefore the profit. So even more so than 5 years ago, having a high credit score, it's more important than ever, because it's intrinsically not who you are, but what your money lending capacity is, borrowing capacity is, and what you're paying on those loans.
Well, if the average amount that someone owes, what did I say before?
12,000. I know. I said it was like 8. That's astronomical.
That's a lot of money.
Yeah.
And if you're paying, is it possible to pay as much as 10% more because of bad credit?
Absolutely. And there's a bunch of new things that are happening that just were instituted this year. And all this stuff, by the way, people, you can get it online. The Fair Credit Reporting Act is under, I got a link here somewhere, it's under fcc.gov. So you can see what they're doing. But it's legal now that if you have a late payment on one of your major credit cards, they can feed that information to other credit cards. Because of that one late payment on that card that's not related to these guys, they can all raise you up.
I think that makes us tense now. We felt more relaxed that we can own a home and have good credit, but having to worry about all of these possibilities is a bit bothersome.
Either that or you just got to behave yourself, and that's what I do. You just got to behave yourself, pay your bills, you know. Stay under the radar.
Well, I think paying them online for me helps, because that way I look practically weekly to see what I haven't paid, and I don't really base it on getting something in the mail that way that I could set aside and lose.
Yep. And I pay mine, I do auto pay, and I link everything to some major cards, and then I just pay them off.
Well, auto pay would be the safest, absolutely.
Although some people say that they have late payments because their auto pay didn't go through, so it's worth it to make sure that that auto payment does.
Okay.
I've never had it happen, but I've heard that other people have.
Now, you said something before that kind of struck me as curious. There was something about going in and looking at your credit report. And I know I saw somewhere where that can actually cost you money in some way. What is that about?
Another great point. Thank you for bringing that up. And let me point to this one, the number of inquiries.
Okay.
Only 10%, people. There are so many headaches and sadnesses and grief and people crying to me. My credit score went down because so many people were looking at it. All of this is documented in the Fair Credit Reporting Act, and it was changed. It was amended again in March of this year of 2003 to specifically for reasons such as this. This is how it works. And everyone will say, oh, well, I heard it was this way, or I heard it was this. Just go online, go to the FCC, and you can find out specifically. Within a 14-day period, if you want to buy something big like a car, or these are called hard pulls.
Okay.
A hard pull is a pull when a lender, like a mortgage broker or a bank or Honda Finance, or when someone who's going to potentially lend you the money pulls your credit, it's a hard pull. And we can see everything. You know, it's more of a commercial-driven pull. A soft pull is when it doesn't affect your score. It's when you look at your score yourself. It's when you go to Experian and Equifax and TransUnion yourself. That's a soft pull. You can do it all day, every day. It won't have any effect because it knows it's you. It knows it's not me. The law states that within 14 days, you can have as many pulls as you want. And I tell people 13, and you better watch where that time frame is, because, like, heaven forbid you have 2 on the 14th, and it, you know, puts you over whatever that period is. But the reason that is so is because we're shoppers. If you want to shop and get a better mortgage rate, why shouldn't you do that? And yet, let's say you weren't able to get that rate within 14 days, and then maybe a month from now you try it again. That's where you're really going to get hurt. And not necessarily a lot. It's, I would say, between 10 points and 50 points, which, yes, can be big, but that's really only big for people whose credit is on the lower tier.
Borderline.
Then you got to worry about it. That's right.
Okay.
And that's like a quick answer, and it's much more complex than that. But
Well, in general, that gives us a little bit of a guideline. But I don't know if it's enough information to help us know that we shouldn't use it. I mean, if I was shopping for a loan for a house, or maybe, I guess you want to get pre-qualified, and
yes.
so then you don't have to worry about this.
Right.
get it over with.
Right. So most people these days, before they even go to a realtor, and most realtors expect them to be pre-qualified, it's a ratio that has to do with what your income is, what your credit score is, very important, and what the amount of down payment you want to give. And these days, people don't. Did you know the amount of down payment within the past 3 years is 3%? People don't even put stuff on a down payment anymore.
And that sounds worse than it probably ever sounded.
In historically, that's right.
Because things are more expensive now. So.
But it's also because there's so many more loan opportunities.
They're not paying much off.
There are so many more programs and so many more angles, the ways that the bank can let you into home ownership. And that's another factor that's driving the economy. And, everybody's talking about how the housing decline is so impacting the market. It's going to be fine. And there's still going to be those other incentives for people to be buying homes. So that's not going to go away.
We're mostly talking about credit scores, but we did go into a little bit the credit history. And I just wanted to ask, in your experience or what you've heard, have there been any abuses of the access to these numbers and to the credit histories?
Yeah, I don't really know a lot about the abuse, but I did see this. You can get some of this stuff online too. There are people who are using fake IDs to do. I saw some guy who was arrested in Maryland who was using all kinds of different IDs and stuff that he couldn't do because he knew. I don't know.
Okay, from the consumer point of view, they were trying to manipulate the numbers by changing their identity?
No, he was a bad loan officer.
I see.
He was a bad loan officer. But you mean for consumers to change their own?
Well, no, I was more interested in, from the consumer point of view, what might they want to be aware of that can happen in regards to?
Two things, and I'll tell you. First of all, it is important to monitor your own credit report. It is important for you to make sure your date of birth is right, your address is right, the spelling of your name is right, whether you're a senior or a junior. Things like that you need to correct. And also mistakes where they say that you never paid that Verizon wireless bill. And I see a lot of Verizon, not Verizon, but I see a lot of wireless bills show up. If you can prove that you've paid it, you send it to each of the bureaus that are reporting that you didn't pay it. And you say, hey, get this off of here. And by virtue of the Fair Credit Reporting Act, they have 30 days, within 30 days, that they must correct it. But what I say to my borrowers is, unlike in America where you're innocent until proven guilty, with your credit report, you are guilty until proven innocent,
right.
Which stinks. But if you can show, and that's why I tell people, every time you pay a bill, you get a zero balance. You get that zero balance letter, say, paid in full, I'm a good girl, I paid my bill on time. And that way you can influence any mistakes, and you can say, get rid of this, change this and make it better. And that will improve your score, absolutely it will, in most cases.
Now, if I was concerned about it, I would probably need the number, which means now I have to pay. I don't have free access to find out what my credit score is. But I suppose, unless I'm contemplating a loan or find that there's a problem, I shouldn't worry about the number.
That's a question that I think I have, it's like a personal opinion. Because of what I do for a living and I see how important it is, I think I would want to know the number. But I'm also miffed because I have seen other people tell me that you got to pay in order to get the number. So
maybe that's a legislative issue.
Well, here's the thing. If you do go to apply for a car or this or that or for whatever you go to apply for, they have to, by law, either give you those numbers or give you a copy of the credit report.
Okay.
That's new. That's, I think, within the past year or two.
Well, they might not know that.
Yeah, people don't know that. Yep.
So that would be very helpful.
Absolutely. And then you can see, and I go over them with my guys. I go over line per line, is this correct, is this correct? And just to make sure that we're not misrepresenting ourselves and aren't entitled to a better rate.
Are there any rules that the credit agencies have to obey? Obviously, there's a million rules. It sounds like a silly question. But are there any rules they have to obey in terms of not abusing our rights?
Yeah, that's all under that Fair Credit Reporting Act, too. And a couple of the things that I outlined are they have within 30 days to get back to you. They have to, and I've already heard, I think they have to provide you with the signature that you provide to authorize whatever debt is under your name, and the
Any backup information that they used?
It's the signature for the name, and the other thing is the signature for the person who requested it, the entity that requested it.
So you have a right to know.
Absolutely. Who's
That-
pulling your
that it's
credit?
legitimate.
If you're denied something, why was I denied it? They have to provide that in writing to
Okay.
you.
And who would you go to if the business doesn't understand that? In other words, if I call my local auto dealership and I say I would like the credit number, I might not know exactly how to tell them that they really need to give that to me.
Oh, I think we're talking about two different things. I was talking about correcting it at the bureau level.
I see.
With
I see,
Experian, blah, blah,
I
blah, blah,
see.
blah. But what you were saying, you know what? I find that a lot of people don't know their scores because a lot of people who do what I do simply don't provide it to them. That's a good question. I guess I would print something off online from the Fair Credit Reporting Act saying you do have the right to get that score and hand it to them because it's a legal issue. It's a legal issue.
We're getting close on time. We have a little bit more, so I just wanted to cover one more thing that we didn't go over yet, and that is if someone has declared bankruptcy for whatever reason, they probably have a pretty low credit score at that point. So what could they do after the dust cleared to build it back up again?
I just went through this with one of my borrowers. First of all, if you do a bankruptcy, you don't necessarily have the worst credit in the world, believe it or not, yeah. If your score is high enough, and what does that mean? It means that you have enough history and enough payments that were made on time. You may still sustain a high score, but you can get a home loan the day after bankruptcy as long as you have those qualifications, as long as maybe your mortgage wasn't paid late, even though you did a bankruptcy. So there are some extenuating circumstances. And the other thing that I say to everybody is if you want to work on your credit, get what's called a secured credit card. And locally, CEFQ has them, Bank of America has them. How a secured credit card works is you give them a balance. In fact, I think CEFQ's is cheaper than Bank of America. You give them a balance that they take and they deposit into a savings account. And they don't tell the credit card companies.
I see.
But that balance is guaranteed because you already gave it to them. And then what you do is you buy gas, you buy groceries, and no one wants to keep a balance of gas and groceries. And you pay it off when you get that every single month. After 3 months, you do that with 3 cards, you're going to go up 50, 60 points.
So it's really a debit card, but they turned it into a credit card with the magic of some kind of a pronouncement.
Yes. Well, also that is an interest-bearing account, so you actually earn interest on that, whatever the available balance is, which may not be a lot. But if you keep that in mind, you can absolutely build your score back up again.
Fantastic.
Yeah.
Well, that is about the end. Is there something we should have covered, if you just want to take a couple more minutes, or did we do pretty well?
I feel like I feel like we could go because there's more, and it's so complicated and it's so detailed. And when I go over somebody's score with them, it takes like a good half an hour just to make sure that we're covering all the things we need to cover. So, you know, it's a bigger problem than we have, what, is this a half an hour? This is a bigger problem than we have a half an hour for.
But thank you so much for bringing this to our show.
Thanks, Rick.
It was a very interesting topic. And I want to thank everybody for watching, invite you to watch our next show, and hope you have a great week. Take care.
Welcome to Channel 17, the Town of Colonie Government Channel.